Hello, everybody. My name is Ryan Brandt. I will be presenting alongside Sean Linde. We are both senior managers out of our Whippany office here in New Jersey. Sean is on the audit side, and myself, I'm on the tax side. We're the cannabis team leaders, and we're going to present today on what we now know in this industry. Sean, you want to take it away?
Yeah, thank you, Ryan. Thanks for the introduction. So we're going to get right into an interesting topic, not accounting related, but the science behind cannabis. I think this is a good starting point for today's presentation to cover some of the elements of cannabis that you may or may not know about. So the science behind cannabis is really still in its infancy stages, even though the plant's been in existence for many, many years. You are likely aware of THC. You're likely aware of CBD. There's additional chemical compounds in the cannabis plant that have been very, very little research to date. The federal government has prohibition on cannabis, so there's not a lot of funding going into research and development, scientific research on the benefits. However, there have been some benefits observed. So CBD is the primary compound that's non-psychoactive, right? Cannabidiol. THC, or tetrahydrocannabinoid, is the well-known psychoactive compound. So those are the primary two compounds that have been researched. They've been found to have various health and wellness benefits, such as stimulating bone growth, pain relief, lowering blood pressure. So many studies to date have been on that.
Oh, okay, Sean. So this is a map. Okay, this is a map that I refer to often. It's always changing. So right now, this is the most up-to-date one that's out there. And this map here shows that there are 18 states plus the District of Columbia that have full legal access to recreational use cannabis. 43 of these states have some form of legality, whether it's recreational use, medical only, or CBD only. And just recently, this past year, a lot of states jumped on board, including New Jersey, Arizona, South Dakota, Montana, New York, and Connecticut. They all passed laws legalizing recreational use cannabis. So a lot came to market this year, which was really interesting in this industry. Also note that these states, even though it's legal to possess, you still need a license to sell the product. So don't expect to see cannabis dispensaries popping up, in your state once it goes legal. The gap between legalization and the start of retail sales could be up to 2 years in some states. Legalizing is only step one. Each state needs to form a commission. That commission is going to set the rules and regulations, and then the potential applicants need to go through a long process of obtaining a license, which could, it could take some time there as well. So it's a slow rollout from what we've been seeing, but a lot of states are jumping on board. And, this map is a good indication that, like I said, 43 states are on board in some form of cannabis. So, I like to keep a good pulse on this. I like to see what's going out nationwide, what's happening in our area. And this is a good map to show that indication.
Yeah, and from a population standpoint, currently to date in 2021, 44% of the U.S. live in a state that, or 44% of the U.S. live in a area that has legal recreational use cannabis. So we're almost at the point where half the entire country is in a state that can access recreational use cannabis, with many states coming online in the past year. One thing that's interesting, each state really has its own marketplace, right? So every state has its own rules, as Ryan was mentioning, and so there's its own pricing, its own supply and demand. Really, it's its own economy is in existence in each state. And there's no interstate commerce. So if you're looking, if you're a cannabis cultivation operator in the state of California, looking to get involved in the state of New Jersey, for example, you cannot leverage your supply chain in California to ship to the state of New Jersey. You're going to have to apply through the license process in New Jersey, get a license, set up a facility in state to then serve the market there. So no interstate commerce.
Right.
So the green rush, a lot of people are throwing this term around in the industry. It definitely is a green rush. We're going to talk in a few minutes about how it's not a green rush without its fair share of issues. There's a lot of hurdles in the industry. But I mean, first and foremost, I think people are looking at the industry as something that's poised for extreme growth. Cannabis sales were approximately $20 billion in 2020, and that's primarily U.S. And that was a 50% increase from 2019 levels of about $14 billion. A lot of analysts, financial analysts, are expecting a $60 billion industry, a conservative estimate from what we have seen, but a $60 billion industry by 2026, effectively tripling the size of the industry as it was in 2020 in a 6-year period. The next item here that's worth talking about, so 2020 presented more than its fair share of challenges, and the cannabis industry being fairly new, especially in the Northeast, really hadn't been recession tested. I think some of the West Coast states were looking at 2012, so there really hasn't been a recession during that time period to test the industry, like many other industries have been recession tested. So there wasn't a significant recession, but however, there were turbulent times in 2020, and people took notice. The cannabis industry thrived. Sales in almost every state were up significantly from 2019 levels. So people took notice, and people are now standing by that this is an industry that can withstand a recession.
That makes sense. It's almost on the level of, recessions and pandemics. They bring along a lot of stress, and what better way to relieve stress, right? Alcohol, cannabis, these are things that, now we know in a recession they could thrive. So I'm going to get into some of the political trajectory. So basically, we've been seeing some positive and strong political trajectory over the past decade or so. As more of these states start to come online and legalize cannabis, U.S. lawmakers are under a lot of pressure to follow. So most recently, in July, Senate Majority Leader Chuck Schumer unveiled this draft bill to legalize cannabis at the federal level. This bill would essentially deschedule marijuana, so it's no longer a Schedule I drug. But in order for this bill to become a law, it'll have to pass both the Democratic-controlled Senate and the House of Reps, and then be signed by the president. 10 years ago, this bill would be unheard of. Yet now, federal legalization of cannabis is being introduced by the Senate Majority Leader, and it has support from dozens of other legislators. Regardless of if this bill becomes law, the idea of legalizing cannabis at the federal level is not as unlikely as it used to be. And this particular bill, if you want to do some research on it, is called the Cannabis Administration and Opportunity Act. If you want to do some more research on that, I just gave a high-level overview. But there's a lot of interesting pieces to this bill that are worth reading about. And the main takeaway is that it would deschedule the drug and it would become legal at the federal level, which would have a significant impact on the cannabis industry as a whole. Sean, you have any other thoughts on that? I think that was a big piece that came about this year. So I thought I'd mention that.
Yeah, that's important, and I think there's been a lot of speculation, with the change in control of the House and Senate, that there was going to be monumental cannabis legislation happening at the federal level. And that's all it's been, is speculation. We haven't seen any indicators of significant change. However, in a few slides, we're going to talk about a significant bill that will help the industry immensely. But it's not the bill that Ryan was mentioning, which is looking to decriminalize and also deregulate cannabis from being a Scheduled I controlled substance.
Yeah, and even if this bill, like I said, doesn't go into law, it's a good conversation starter. It's a step in the right direction for the cannabis industry. Also, I want to get into some more, so next bullet point here, the ancillary markets. The ancillary markets are, I like to call it the untapped market in cannabis. So an ancillary business is one that supplies products or services to the cannabis industry, but they don't actually touch the plant or the plant byproducts, and they don't need to be licensed in cannabis. So if you think about it, really, cannabis intersects with a significant number of industries, right? You have healthcare, you have agriculture, manufacturing, and even real estate. A lot of our discussion revolves around the plant touching companies, but there's going to be significant growth in the ancillary markets as well. So think about companies that specialize in fertilizer, soil, pesticides, the lights that grow the plants, solar power, solar panels on these grow houses, and even HVAC systems. These are all products that are essential to growing the plant. So we're not only working with the plant touching companies, we're also working with companies that support the cannabis industry. And we call this the ancillary businesses. And there's a huge market for that, and we shouldn't be discounting them.
Yeah, and one advantage of these ancillary markets, Ryan, is they can tap into the capital markets, right? So they could be publicly traded entities. Right now, NASDAQ, New York Stock Exchange, prohibit any plant-touching company from being listed, and that's not going to change until there's federal reform. But I mean, recently, one of the ancillary market giants was a company called Weed Maps. You may have heard of them. They provide a advertising solution to cannabis operators. And I think they went public in the summer of this year. So that's just one example of one of the beneficiaries of this ancillary market. So we mentioned there, it's a green rush, but there are a lot of challenges. So the first three items that are on this slide are probably the most significant challenges to anyone in this industry. The list isn't exhaustive. There's a few additional items that are worth mentioning. But first and foremost, the fact that it's a cash business, right? So there's not financial institutions. There's not access to financial institutions. I think a recent statistic I saw where there's about 700 financial institutions in the U.S. that are willing to bank cannabis out of a total of 10,000. So we've seen some credit unions and some smaller local banks that are willing to bank cannabis customers, but there's not many. Ultimately, there's a lot more that goes into being a cash business. You have extreme costs to safeguard cash as an asset. You're going to be looking at transporting that cash as a cost. You're going to be looking at complying with anti-money laundering practices, policies as a cost and a burden. You're going to be potentially having to hire armed guards. So there's and perhaps most importantly, your customer base is not going to be able to use a credit card. All the cash transactions occurring in a dispensary are going to be cash or perhaps debit card based. So that will also not change until there is federal reform. A second huge challenge is the illicit market, or like some states refer to it as the traditional market or the legacy market. So you have operators that are in the supply chain of cannabis that are not licensed, right? They're not complying with the state's regulations. They are not paying the license fees. They are not paying for seed to sale tracking software. And they perhaps are not filing tax returns. And so they are at a huge advantage in saving money compared to a operator that is complying with the market. I think statistics have said there's about 80% of the cannabis transactions occur on an illicit market. So it's a huge issue in the industry for any operator. And so that's one of the big challenges. Ryan, as a tax specialist, I'll let you talk about 280E.
Yeah, I'm going to get into this more later, but at a high level, there are not many favorable tax advantages if you're a plant touching company. I've seen companies pay up to 70% effective tax rates on their net income. They're not taxed like a regular business. And again, I'm going to get into this more in a little bit, but this is a big deal in the industry. And it's just another one of those barriers to entry. Also, Sean was mentioning that there are no banks in the business. Banking's tough to come by. And even if they're allowing deposits and maybe like a checking account or something like that, these banks are not lending. So if you're lucky enough to actually find a bank that's lending, they're charging crazy interest rates, something like 30% and higher. There's also these private investors who, these private investors are going to be selective on who they choose, and they're not going to gravitate to some of these smaller startup companies. So access to capital is going to be tough if you're looking, for outside sources of funding, which again, another barrier to entry. This is just one of those things, Sean.
Yeah, and I mean, there's a lot of hurdles, but we've worked with people in the industry, and I mean there is a huge upside to this industry. So we just like to inform everyone about these challenges so they can adequately work with them. Next one here is frequently changing regulations. You have state regulations changing frequently, federal regulations changing, municipal regulation, zoning. It's a very complex landscape for any operator in the industry to keep up with all the regulation changes. Brian was talking about the political trajectory at the federal level. One important bill that's been on the table for several years now is the SAFE Act. That's the Secure and Fair Enforcement Banking Act. That's really going to be a game changer for this industry because it's going to allow companies or any operator in the industry access to safe banking, access to financial institutions, as those financial institutions will not be prosecuted for working with cannabis customers. So that I believe is currently in a bill scheduled to be unveiled in 2022 as part of a larger bill. So to be seen if that gains momentum and stays in the bill or not. And then the last item here is just lack of service providers. There's not a lot of payroll providing companies. There's not a lot of public accounting firms. From any professional service provider has their own risks and tolerances to this industry, and some are just looking the other way right now. So Ryan and I work with a number of clients, and there's not many service providers that are in these spaces that are willing to do business with a cannabis operator.
Right.
So with regard to the application process, we thought this was very apt. I know a lot of the Northeast states, New York, New Jersey, Connecticut, many companies, multi-state operators on the large side to small entrepreneurs on the lower end of the side are all going through the same application process right now. We spoke to many, we see the concerns, and we just wanted to highlight some of the main items that are happening in the application process. So New York and New Jersey specifically have crafted a framework that prioritizes social equity, from awarding points in the application phase to setting up a business in a impact zone, or prioritizing licenses to those who are minorities, women, or veteran-owned businesses. There's a full landscape of points that are awarded based on social equity criteria. And so some of the license types Ryan's going to take you through now.
Oh yeah, thanks, Sean. Yeah, so there's several classes of licenses that could be awarded if you're going through this application process. And these vary, based on what state you're applying in. But some of the main classes are obviously the cultivation and the retail, right? But there's also processing, wholesaling, distributor, and delivery services that you could be licensed for. So just be aware that if you're licensed in cannabis, it doesn't mean you could just grow and dispense and deliver at your leisure. There are certain classes of licenses that you need to apply for. Most recently, we've been seeing these micro licenses being offered. These micro licenses allow the smaller entrepreneur to get into the industry quicker. The application process is more streamlined. However, there are some regulations around having a micro business or a micro license. They're going to be limited to the amount of revenue that they could generate. They're limited to the amount of square footage that their facility could be, and they're limited on some number of employees. So there are some limitations to a micro license, but again, this is helping the smaller guy get in business. And we've been seeing a lot of this. A lot of our clients are applying for micro businesses or micro licenses. A lot of them actually have micro facilities. So it's been really nice to see that these smaller guys are getting a chance.
Yeah, and so one of the challenges that was mentioned on the last slide was the unfavorable tax positions of Code Section 280E. And so Ryan's going to take you through a couple slides now that just illustrate exactly how detrimental that is to the industry.
Yeah, so this is the main thing that I like to focus on as a tax guy. In the interest of time, I'm just going to do a high level look at what 280E is. 280E is a very short provision in the tax code that says if you're dealing with a drug that is on the Schedule 1 or Schedule 2 list of substances, according to the Controlled Substance Act, you're considered trafficking. And if you're considered trafficking, you're not allowed to take deductions or credits on your tax return. Deductions or credits, remember that. However, Section 280E does not prohibit a plant touching company from reducing its gross receipts by cost of goods sold. So generally speaking, cannabis plant touching companies can only reduce their taxable income by the cost of goods sold, which is really crazy when you think about it. All those below the line deductions are off the table. But you might be asking yourself, why are these deductions disallowed but cost of goods sold are permitted? The answer basically lies in the way the internal code is written. Section 280E concerns only deductions and credits. There's no disallowance in the code for cost of goods sold, which is an exclusion from gross income rather than a deduction. So that's how they kind of get around it. It's still a detriment to the cannabis industry, but at least they have cost of goods sold to kind of reduce their taxable income. Next slide, Sean. All right, so so how did 280E come about? What made them write this into law? So a throwback from the Reagan administration, Section 280E actually originated from a 1981 court case where a convicted cocaine trafficker asserted his right under federal tax law to deduct ordinary business expenses. He asserted his right and he prevailed in tax court. And this is when the government, they challenged his deductions, they challenged his cost of goods sold, but he won. So it's safe to say the IRS and Congress were not very pleased about the outcome. So in 1982, a year later, Congress created 280E to prevent other drug dealers from following suit. So now, almost 40 years later, cannabis companies are still dealing with the tax burden of this code section, which I thought was pretty interesting.
Yeah, and now we have an example where we can go through and just see how severe 280E is going to affect a cannabis touching company.
Yeah, cool. So this is another high level example, but this will illustrate it in a way that's quickly understandable and shows the effects of 280E. So on the left we have Bob's Bakery. He sells baked goods. On the right we have Mary Jane's Edibles. She sells baked goods that contain cannabis. As you can see, they both have the same financials across the board. They each have about 1.5 million of revenue and $500,000 of cost of goods sold. They both have gross income of $1 million with $275,000 in operating expense deductions. The only difference here is that Mary Jane's Edibles uses cannabis in their baked goods. So they're considered trafficking in illegal substances, and therefore they are subject to 280E. This means that all the below the line deductions, such as advertising, rent, payroll, all these good things that add up to about $275,000 are disallowed for Mary Jane. You can see I put a big red X through those figures to illustrate it. As you can see, Bob's taxable income is $725,000. Mary Jane's taxable income, since she doesn't get those deductions, is the same as her gross profit at $1 million. So really, that's what I kind of look at when I'm doing these cannabis tax returns. I look at the gross income, and that really should match the taxable income because all the stuff in between is off the table. Again, these are similar companies, similar income and expenses, but Mary Jane is going to pay almost $60,000 more in tax because her brownies contain THC. So this is a simple example that shows the reality of Section 280E, and you know, it really highlights the detriment to the cannabis industry for taxes.
Yeah, and so Ryan, I'll just chime in. So there's, you know, from my auditor standpoint, there's incentive for companies to load any SG&A costs into cost of goods sold, right?
Oh yeah, for sure. And there's that the 263A unicap rule that does not apply to cannabis companies. So you can't be taking SG&A expenses and moving them up into inventory and capitalizing them. The code says you can't make something that was not deductible. So section or unicap 263A does not apply. And just be careful out there, guys. This is my last thought. The IRS has a task force that is dedicated to enforcing Section 280E. They're well educated. They know what to look for. So these are things the plant touching companies just need to be aware of. And I like to, you know, speak to my clients on all of this and make sure they're aware as well. I think that's all I have for now. Sean, if you wanted to add anything else, I think we're at our time limit here.
I think we are, Ryan. Thank you, everyone, for tuning in to this session of today's presentation. Hope everyone has a great rest of the day.